Here we are, right there. Here we go. Well, good morning, everyone, or good afternoon, good evening, wherever you're coming from. This is James coming to you from the 10-Minute Trader. You probably hear my voice is kind of raggedy. I caught some kind of virus from my son. Thanks a lot, buddy. Just what I needed. All right, let's get back to what we're looking at. And one of these days I'll get this thing figured out. Today is January 5th, Thursday, 9:01 p.m. Now, Thursdays we're usually talking about dividend investing with options because we found last year sometime that options are going to give us a lot better. But, to be totally honest with you guys, ever since Donald Trump got elected back in November, everything's been crazy. The numbers are all just insane. I just don't know what to do, It's just weird. Okay. It's not moving on me. Alright, so let's go with the market watch, see what we're looking at. Now, if you guys have been following me around or if you've been seeing some of the other videos I've done, you'll notice that I always trade 10 days prior to. Okay, so today's trades were going to be going EX on the 19th. Okay, so the 19th, today's date is the 5th. So here we are on the 5th. I looked at these last night, which was the 4th. So I put them in last night, and they got filled this morning. And 10 days from today is going to be the 19th. So you count it out, and you don't count Saturdays and Sundays because there's no trading on Saturdays and Sundays. There's not going to be any trading on the 16th, but we're not really looking at that. So anyway, we're looking at companies that are going EX on Thursday, the 19th of January. And there's only 6 of them. ACS, BCRs, and I went over these last night, so I'm not really going to go over. Not last night. I went over these on Tuesday because we did some regular trades on those, and last night I made some other trades. So let's see what we're looking at today. And with options, it's like I have so many positions open, and I couldn't believe I get so many positions open on what is today, the 5th day of the year. You really can't count it as the 5th day because there was no trading on Monday, so Tuesday, Wednesday, Thursday, 3 days. Okay, so we're looking at 3 days so far, and there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16 companies we're into already. Now, you will see that there's, if you come over to the column, it says P&L, profit and loss since the open. The 0 here, this means we're out of that position. The 0 out of that position, out of these positions. Out of that position, out of that position, out of that position. Okay, so we made 500 off PNM today. We made 190 off of LTC. And I believe that's it. We made 92 off of ACSF. Okay, so great. That's what we made for the day. But look at here. This is the third trading day of the year, and we're already up $4,000. That's 4% within the first 3 trading days. That's crazy. Anyway, they're not real numbers because the options expire on Friday. And as you'll see, these little tiny ITMs right here, little ITM means in the money. I'm going to show you that in a second. Now, this one doesn't have it. That one doesn't have it. Some of these don't have it, but a lot of them do. And I'm going to show you in a little bit what exactly those are. Okay. Now, here are my open trades. Here's my buys. BCRF, those ones right there. Those will be eliminated by the end of the day because those were open orders, and they're only day orders, so they should be done and over with. Now, don't ask me why they didn't get filled, because they usually should fill within the very same day. You open at the market, you buy at the market, and it should fill it automatically. These ones didn't. I don't know why. But tomorrow morning, we'll be looking at doing some more trades because these are all going to expire tonight. So first thing in the morning, we're looking for something else to do. All right, so let's jump on in and see what we're looking at. Oh, wait a second. Those are filled orders. What am I talking about? What did I have for working orders? I don't have any working orders. They're all expired. Okay, these are filled orders. There's only 8 of them for the day. The other ones were filled from yesterday. All right, sorry about that, guys. Those are filled orders. Looking at the wrong one, the wrong list. Okay, so here are all the guys we're looking at that we have today, and let's go over a few of them and see what we're looking at. Okay, so ACF, we profited one night. We profited $100 on that one for the day, so we're not going to look at that one. It's not worth it. AET, we still have this position. So let's pull them up. AET. All right, so AET had a high back in the beginning of December of 136. The low way down here, 92. She's been going sideways for almost the whole year. And look at this. Beginning of November, just before the election, this thing just shoots up and goes, and then she settles back down here. Okay, so this is where we're looking at right now. Now, there's a dividend coming up. Now, I honestly couldn't tell you at this moment in time if it is the 19th or the 18th of January or even the 17th of January, because I could have bought this yesterday or the day before. I don't know, but at the moment, this is what we have. So I'm just going over the numbers to find out what we're going to do and how this play looks. Okay, so I pulled this up. This is where the stock is right now. A little slight downtrend. She bounces off the bottom right down here on the 3rd, which was Tuesday. The market opened on Tuesday, Wednesday, Thursday, 3 days. Tuesday, Wednesday, Thursday. Here we are today. And let's take a look at AET. Let's view the trade. Okay, so here's the trade right here. The 6th of January, which is tomorrow. So this option is going to expire tomorrow. We get the 121. So we bought 10 contracts of the 121 put, and we sold 10 contracts of the 122 put. So what does that mean? That means if this thing closes below 122, we have to buy it at 122. If she closes anywhere above 122, all that money is free. I love that one. Yeah. So anyway, she's got a dividend coming up in the next couple of weeks. So I did buy this one yesterday. Here's the trade right here, 1-4. So we bought and sold this, the calls and the puts, the 121 and the 122 puts yesterday at the open. So I got to thank my son for this. Very nice of him. So we're going to try to keep this a little bit on the short side. Okay, so this is going to expire tomorrow. Do we know whether or not this is going to stay above 122? I honestly don't know. You got a dividend coming up in 10 days. Everything, and the only reason we got into this, like we went into it the other day, to show you what the stock symbols were, what the software said, and that's why we have it. We have 10 contracts, which controls 1,000 shares, and right now we got a profit and loss in this one of 267 since the opening, so that's in 2 days. That's not bad. All right, let's get out of AET and let's look at this one right here, APA. Where, like I said, we're not looking at the first one, only because we already bought and sold that one. We're already out of it. Unless, what the heck, let's just take a look at it really quick. ACSF. Let's go back and take a look at the whole year. All right, she had a high of today, 1258, and a low for February the 23rd of last year. And the last 90 days, this has been slowly going up. In the last 2 days, yesterday and today, crazy. All right, nice volume. Look at the volume there. Wow. All right, so ACSF. Let's take a look. Oh, I can't even take a look at it because we're not in that position anymore. ACSF. Here it is right here. We bought ACF this morning at 1240. We sold it. Wait a second. Yeah, we bought it this morning. Yeah, 1240. We sold it at 1250. Only made 10 cents off of that one. 10 cents per. That's because the option, not the option, sorry. The dividend was only a 10-cent dividend. So we got in, got our dividend, and we got back out all in one day. I like those. All right, let's get out of that one. APA is the next one we're going to look at. APA, here we go. All right, had the high December 12th of 69.20. The low way back in January 19th of last year of 32. The last 90 days. Kind of like going sideways, not making much play. But look at this. 1, 2, 3, 4, 5, 6, 7, 8. 8 down days in a row. So what is the movement that we actually made on APA? What was the call? Now, APA has a dividend coming out. And let's take a quick look at the trade. All right, we got the 62.5 and 63 calls. So what does that mean? That means we profit if this stock stays above 63. Right now she's at 63.25. So she's going to open tomorrow. She's got a dividend coming up, so hopefully she's going to stay above 63. If she stays above 63, that's free money. I like that. Okay, so it can go up, we make money. It can stay the same, we make money. And she can go down 25 cents, and we're still going to make money. As long as she closes tomorrow afternoon, $63 and 0.1, whatever, 0.01, whatever. As long as it's over $63, that's all profit. And that's what I like those. You can go three directions. That's the only way stocks move anyway, up, down, or sideways. All right, so that's the first three is good to go. The next one we're looking at is BCR. BCR. Okay, BCR is at 229. The high for the year so far was in first week in July. The low for the year was January, the second week in January of last year. The last 90 days went sideways for about a month. Now she's going straight up. The first 3 days of the year, 2 down days and an up day, which was today. So what do we have for BCR as our play for the day? Actually, we're out of BCR. Huh. Okay, so we're out of BCR. All right, so we bought BCR at 229.69 and we sold it at 228.89. Oh, sorry. We bought it at 228.69, sold it at 228.89. Why only 20 cents? Oh, that's right. They only had a 40-cent dividend. 20-cent dividend. We went for the dividend. We got in, we got out. Now, how quick did we do that? 9:34:32, 9:35. It's like in 2 minutes. 2 minutes. We're in, we're out in 2 minutes, and we made, what was it, $80? All right, so it's $80. Big deal. All right, the next one we're looking at is CAT, C-A-T. C-A-T. CAT had a high of 97, and that was the beginning of December. Had the low way back in January, the third week in January of last year. The last 90 days, she had a big jump day after the election. November 9th. All right, November 8th, she had a nice up day. November 9th, look at the volume spike. That's a huge amount of volume. That's volume, 2, 3, there's almost 300% volume increase. You know, the volume way down here. Look at this, way up there. All right, so she jumps up, she gaps up. And then from the gap up, she basically goes sideways. We have 4 down days in a row, today being one of them, and we're at Caterpillar. And what did we do for Caterpillar? Caterpillar is the 93. Okay, we bought 93 calls and we sold the 93 calls, 93 and a half. So this thing has to settle 93 and a half or above. Or we have to end up buying it. Looks like we're going to end up buying Caterpillar, because I don't see Caterpillar jumping up 50 cents tomorrow. Okay, I mean, don't get me wrong, it's not unheard of. Okay, she closed at 93 today, at 93 and a half. Don't get me wrong, it's doable. Right? Caterpillar's not a bad company, and I don't mind owning Caterpillar. I can pay you off give me some dividend payments coming up. The dividend's coming up in 10 days. And let's quickly plug Caterpillar into our software and see what that says. All right. Scroll down a little bit and put Caterpillar in here. C-A-T. All right, and we need the 19th because that's when it's going to go EX. And we're going to plot the dividend. Here we go, and let's take a look at the numbers. All right, Caterpillar, 1111. Look at 11, 8, 41 last year. Oh, I don't like that. And the 0 the year before, I don't like that either. So it's a 77-cent dividend. All right, let's get rid of the blue line, which is 2015. Let's go for the average. All right, so this is what Caterpillar looks like. 10 days prior to the EX, she starts a little high. All right, looking at 1 point day or close to 2 days before we make that. But other than that, she goes down for about a week or so. After that, nothing but up for the next couple of months. So we are going to get the dividend out of this. We are going to get the, I shouldn't say we are. There's a good possibility that we are going to get the money out of this one. All right, so I like this scale. This scale looks pretty good. The chart looks pretty good. All right, so let's move on. And if I have to hold on to it, look at that yield. 3.3, not bad. I can live with that. All right, let's go back to here. All right, so Caterpillar, I can live with owning it. All right, first thing Monday morning. Let's take a quick look. How about we just wait until Monday or Tuesday? I guess Tuesday we can do it again anyways, and we can sell the... All right, let's put Caterpillar in here. So next week, all right, we got Caterpillar at 93. Is that right? 93 and 93 and a half. I think we have to buy it at 93 and a half. I'll check that in a second. All right, and if I sell that, go to the single. The 93 and a half is right now at this moment is selling for 95 cents. So 95 cents, how many shares do I got? Caterpillar, we get 10 contracts, which is going to be 1,000 shares. So at 95 cents per stock, that's $950 minus some commissions, probably about $900 for the week. Then it has to close 93.50 or above the following Friday, because apparently I'm going to end up buying this thing at 93.50. Yeah, we bought the 93s and we sold the 93.50s. So come Monday morning, we're going to own, looks like there's a good possibility of me owning 1,000 shares of Caterpillar at 93.50. All right, I don't mind. Caterpillar's a good company, nice yield, and I can sell off the weekly options on it to give me some more money rather than just collecting. Let's see what dividend Caterpillar is giving anyway. Caterpillar, 77 cents. So 1,000 shares times 77, that's $770. Okay, so now I have two options here. One, with 1,000 shares, I can collect $770. Okay, that's the dividends. Love it. Okay, if I'm on margin, then I'm still going to collect. I'm going to collect twice as much on my money, which is good. But I'm not going to talk about margin because I don't want people thinking that that's it's a good way. It's nice for leverage, but you really have to be careful so you don't get caught with your pants down, so to speak. All right, that was Caterpillar. All right, let's look at CVS. All right, now CVS was going sideways for a while. She had a high way in May, the first week in May at 107, and she bottomed out right in just before the election, the beginning of November. Okay, now she's been going sideways with a little tiny bit of an upswing. So let's see what CVS looks like. CVS is in the money, so that's good. Let's view the trade for CVS. Okay, so we bought the 79 calls and we sold the 79 and a halves. Okay, she's at 81. What does that mean? That means we're in profit. Okay, anytime it says ITM, it means we're in the money. So we really don't need to look at those, but I'm trying to show you guys what they are. Okay, so CVS has a dividend coming up. The stock moves up. We bought the 79 and a half call for tomorrow. All right, and I don't quite remember exactly what our profit was. But anyway, we're into profit on that one. All right, next, EOG. EOG had a nice incline for the whole year. Look at that. Had a high in December. The second week in December at 108. And the third week in January last year had the low. Last 90 days, nice movement. She's going sideways right around election time. She didn't do very much around election time. Went sideways for a little bit. And then towards the end of November, it's a nice spike up. I don't know why. I have no idea where that spike comes from. There's no real reason for it. Okay, so she's going sideways, a bunch of down days. Look at that nice downtrend. In the last 3 days, or the first 3 days of this year, she's a nice little up movement. So EOG, we're looking at. Let's take a look at the trade. All right, EOG, we had the 101, 102 puts. Now we sold a credit spread on this one. So we actually had money coming in. 10 contracts. We sold the 101, the 102. So what does that mean? That means if this thing closes tomorrow below 102, we have to buy it at 102. Okay, it could close at 99 and I still have to buy it at 102 because see, I sold the 102 puts. Okay, if it goes to 101, then I'm only losing $1,000 because the difference between what I bought and what I sold is the maximum amount I can make, which is $1 per share. Now, I'm paying 39 and getting 56. So the difference between these two is going to be how much of a spread that I'm actually going to collect or the profit that I'm going to make on that one. All right. So I don't see why it's not listed as in the money on that one. Oh, because it's a put. That's why. But we are in the money on that one. So if it settles above 102, I don't have to buy anything, and I just keep the premiums. I like those. All right, GD. That's the next one we're looking at. GD. And GD is a nice uptrend for the whole year. Had a high the beginning of December, 179. The low way down third week of January at 123. And look at that, election day, 108, the very next day. Look at this volume again. This is like the, all right. You're going to have a few pivotal points you're going to look at. Something that happens that has nothing to do with the stock market that causes the stock market to go crazy. Okay, 08, you had the big financial meltdown where all the stocks dumped in all of 08. You had the what is it called, the tech crash in the 2000, the 2000 tech bubble burst, whatever that, everything tanked. Well, here you're looking again at an incident that happened in our country that has nothing to do with the stock market, but it affected the stock market. So, election day, November 8th, the very next day, look at this thing, shoots up, and this thing goes up for almost a whole month. All right, so now she's going sideways, so let's see what she's doing now. Now, GD, what did we do? GD, we're looking for a 165, 170 call with 10 contracts. So basically, if this thing stays above 170, that's all profit for us, which is a good thing. I like that. So right now she's at 176.14. Okay, I like that. GD, HUM. HUM is the next one. It's Humana at a high beginning of December at 217. And a low way down here July 15th at 150. That's a big spread. That's almost a $50 spread. That's 25% of the stock price. I don't know, that's about right, 25%. Just sounds like a lot. Okay, to the last 90 days. Here we go, another one. Right around election time, the beginning of November. Nothing but up, 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 up for a whole month. And then sideways for another whole month. Crazy, I tell you, it's crazy. Okay, Humana. Let's see what we did for Humana. View the trade. Now we get the 195, 197.5 put. Okay, so this stock has to stay above 197.5 for us to make money. She's at 200. What do you think? I'm thinking she just might stay above 197.5. So that's all free money also. Love it. Okay, Humana. All right, LTC. Let's take a look at LTC. LTC. All right, LTC had a high way back in beginning of September at 54. She had a low way in the beginning of February of last year at 40. And that's for the last 90 days. Makes a nice little dip between end of October to the beginning of November. And then she did nothing but sideways since the beginning of November. This is one company that wasn't really affected by the president. Okay, so LTC is at 47.29 at the moment, and let's see what trade we put on this morning, or was it yesterday? I don't know. Oh, we're already out of that one. Okay, when this shows up here, that means I don't have a position. So LTC here, all right, we made 190 bucks. Where's LTC? All right, so this morning we bought LTC. We bought 1,000 shares of LTC at 47.15, and at 10.44 we sold LTC at 47.34. So we actually collected the dividends equivalent. So we went to see what the dividend was. Let's quickly go back to LTC. LTC right here, 19-cent dividend. Okay, so we captured that 19-cent dividend in one day. Okay, great. So I don't have to wait. I don't have to, hang around and hold on to it for a couple of weeks. Jump in, jump out. That's the idea. That's the name of the game that we're playing. We want to catch the dividends, get out. If not, let's catch some option plays, All right, that's LTC. P&M, we already looked at that one earlier. P&M, we got in, got out. Look at the difference here. First thing this morning, we sold 2,000 shares of P&M at 34.30, and then we turned around and rebought it at 34.05 at a lower price. So we made money on that one, and that took a whole grand total of, check this out, 42 seconds. Okay, you look at the numbers yourself right here. 1/5/17 at 9:31 OM. Stock sell 2,000 shares PNM 34.30 at the market. Okay, and 1/5/17. Look at the part. Look at the time. 9:31 and 42 seconds. Okay, so we sold and then we bought 42 seconds later, made $500. Love it. Okay, potash. Let's jump over and look at potash, POT. Potash had a high the second week in December at 19, almost at 20, and a low back in the third week in January at 14.69. The last 90 days, we're looking at a nice little uptrend, and then she's going sideways for the last 30 days. Okay, so we're in the third day of January. And let's see what our trade is. Remember, we get the little ITM here, which means in the money, so we're already in profit. Don't really need to look at it, but I want to show you guys anyway to see what we did. All right, so we have the, that was this morning, see at 9:31:02. Okay, that's 2 seconds after 9:31 after the market opened. Potash, 6 January 17, that's the 6th of January, which is tomorrow, 2017. The 17.5 calls we bought and we sold the 18 calls. Okay, now we're getting the spread between the two, between the 17.5 and the 18. So what is that spread? It's only a 50-cent spread. It's not a lot of money. So why do we do that? We do that because where the stock price is and where do we think it's going to go. Okay, now we know with the software that we have, we looked at 10 years worth of data, and 10 years worth of data says just before the dividend, the stock moves up. Do we want it to move up a lot? No. When we sell a credit spread, or we buy a debit spread, we want to go close to the money to the point where we can make money if the stock goes up, the stock goes sideways, which basically stays the same, or it goes down a little bit. So where are we now? Okay, we had an up day yesterday. And she opened up at 18.24. The high was 18.80. Today, she opens up at 18.77, and she closed at 18.76. Okay, had a high of 18.90. Not a lot of movement, but right now she closed at 18.76. And where are we? We want to stay above 18. So this thing can drop all the way down at 76 cents, and we're still making money. It has to go below 17 before we have to buy it on Monday. Okay, so the odds are, you got the 3 different softwares that all say this stock is going to move up 10 days prior to the EX date within this week. So what we're going to do is take advantage of it. Why not? Is it guaranteed? No, it's not guaranteed. Is it a good possibility? Yeah, it is. Okay, so potash, here we are. It's at 18.76. If she stays above 18 tomorrow, this one's all money. Okay, I like that one. VALE. Let's take a look at Vale. VALE. All right, VALE at the first week of December had a high of $9.19, and way back in the third week of January, she had a low at $1.96. Am I reading that right? $1.96 in January of last year, and she peaked out at $9.21. That's like an 800% increase in 1 year. That's awesome. Okay, so what did we do at VALE? Okay, VALE is basically going sideways for the last couple of months. The last 30 days, slow downtrend. But the last 3 days, beginning of the year, 3 days of this year. All right, let's take a look at Vale. And we said we're in the money, but let's take a look at the trade. All right, we have the 7.5 and the 8. Okay, we bought the 7.5 and we sold the 8. It means we only have the difference between the 7.5 and the 8. That's the most amount of money we can make. Now, this thing closes below 8. We're going to have to buy it on Monday. But then again, why not? 1 year, she went up 800% or more. I don't know. I didn't do the exact math, but you saw it. Okay, so that was a profit. It's a good indication she's gonna stay into profit. All right. We got 3 more to look at before we look at some questions. WFM. Whole Foods market, gotta love it. Okay, Whole Foods had a high in the first week of June at 35.55. Had the low way down here in September, second week of September. Okay, lately she's been going sideways right around election. Look at this, another one, election. 5, 6 straight up days in a row. Is that right? 1, 2, 3, 4, 5, 6 straight up days after the election. She went from 28.79 and she peaked out at 32.47. That's a nice movement right after the election. Okay, since then she's been going sideways. Lately, for the last couple of weeks, she's been going down. The first 2 days this year. All right, I can live with them. So let's see what we did for Whole Foods. Whole Foods, we got the 30 calls and we sold the 35.5 calls. So we have to stay above 35.5. Okay, and at this moment in time, she's at 30.46. So what does that mean? That means if today was Friday, we would end up buying that thing first thing Monday morning at 35.5. All right, do I want to buy Whole Foods at 35.5? I really don't know. This was yesterday's. See the date right there, 1/4. So let's quickly take a look at what the dividend on this one was. Oh, it's not on there. Whole Foods, WFM. Nope. Nope, no WFM. No WFM. No WFM. So where is this one coming from? Could she be coming from here? The 13th? No. Coming from the 12th? No. The 11th? There's 37 companies on the 11th. WFM right there. On the 11th of January. Wow. So why did I get into this one? I don't know. Probably a weekly option. Anyway, Whole Foods, we're looking at a 14-cent dividend. So we made a little bit of money selling the option. Come Monday, we're going to WFM. 30.5. 30.5 would be 37 cents. That's more than the dividend. So we can sell the option for someone to buy it for the exact same we paid for it, or hold on to it and collect the dividend. All right, that works. All right, so that's WFM. So why does it say in the money? Because we're not in the money. Yeah, the 35.5. All right, well, anyway, we're going to keep an eye on that one tomorrow. Got 2 more to look at. Yum. YUM. Now, Yum is, I don't like this jump. It makes me uncomfortable. Now, Yum Brands is a dividend king. They've been increasing their dividend payments for over 50 years. Every year they increase, giving out more and more money to the investors. So that's a great idea. So you buy it, you get to get higher dividends every year. That's if you hold on to it. Me, I don't want to hold on to it. This one is a weekly option, so I can sell every week. All right, so she had a high of the second week in December, 64.45, and the low way back in the second week of February at 16. Now that, my friends, is a huge jump from 16 all the way up to 65. That's a big jump. Okay, so for the last 90 days, she's been basically going sideways with a slight little uptrend to it. All right, so she's at 63.65, and what position do we have? 63.65. Okay, so we're at the 62.5 and the 63. So anything over 63 is going to be profit. So we don't have to do anything. We don't even have to sell it because it automatically sells first. We don't have to pay the commission, which I kind of like it to expire worthless, because they say it expires worthless, but not necessarily so. It's going to expire, and I'm going to collect the money that in between, you know, my profit, and I don't have to pay the commission, which I like that. All right, so she has to stay above 63, which she's at 63.65. I like that. Good possibility. Ooh. Oh my goodness, excuse me. A good possibility, because the 3 pieces of software that we looked at says it's going to go above, and it's going to move up 10 days prior to the EX date. And the EX date on this one we found was what, the 13th of is next week or the week after? No, it's next week. Okay, so she's still going to go up. For the fun of it, let's take a look at Yum. Put it into our software. So if you guys are a member of this, you can get a hold of the software. All right, Yum. And we said it was somewhere around the 11th. You only have to be, close to. You don't have to be spot on. Okay, Okay, let's get rid of that blue line, just to the average. Okay, so 10 days prior to the EX date, she goes down a little bit. She drops. After that, she moves up. So worst case scenario, I'm going to hold on to it, and I'm going to sell options. I'm going to sell weekly options, get a little bit of money. And I'm going to do that every week until she gets out of the price that I want. But look at that. All ones, except for right here, 2015, which is 16 days. But other than that, she's won, so average of 2 days. Got a yield of 2.73. I like that. It's not bad. 4 million shares traded on a daily basis, average. All right, so let's get back to, we have one more to go, and that would be ZTS. ZTS. All right, so ZTS had a high of this week, 54.14, and the low way back in the first week of February at 38. It's not a huge spread, but it's good enough. Last 90 days, she's been basically going sideways. In the last 30 days, a nice slight uptrend. So what are we looking at today? So this week we had 3 days. Not the greatest in the world, but let's take a look at the trade we have here. All right, we got the, we bought these yesterday. So it wasn't today, we bought these yesterday. 10 calls at 53, and we sold 10 calls at 53.5. So this thing has to settle above 53.5 for us to be into the money. Now, right now she's at 53.93, which is 40 cents into the money, which is a nice, a nice space to be in. So there's a high probability that this thing's going to stay above the 53.50, right? 53.50. Okay, so as long as she's above 53.50, this is all free money. So as you can see, almost every single position we buy is favorable so far. And it's very difficult to tell why, because Donald Trump coming into office, everything is askew. There's no normalcy. Nothing is normal. Okay? You saw the charts. As of the election, things are going up. So is it right, or is it just, buyers' anticipation of an increase? We don't know. But anyway, let's see if we can make money off of this. All right, so as you can see, as of today, we're already up $4,000 for the week. That's 3 days. Up $4,000 for 3 days. Crazy, I know. But we'll get a better accurate feed on this come Monday, because options expire on Saturday. Saturday. The weekly options can expire this Saturday, which means everything will be settled Monday morning. So Monday morning we'll have a better accurate count of how much we actually made this week, and if we're going to carry anything through into the next week. All right, so I'm going to quickly check with YouTube and see if we have any questions. My voice is kind of crappy, so I'm kind of hoping I don't have any questions. Good, no questions. Wonderful. All right, so I have no questions. So you guys, I'm going to cut out early because my throat is killing me. I thank my son for this. Thank you very much. Our stock tips. If you guys part of the members area, $29 a month, it really ain't that bad. You guys get in, you get the readings from the software, and eventually you will actually get the software. You get access to the software, which changes all the time. Anytime the data services change their dating files, we have to go in and we have to change the software. Now the other one is right here. You eventually, after a couple of weeks, you actually get access to this software. You get to download it onto your own computer. Other than that, this is James signing out from 10 Minute Trader. You guys have a great time. Happy trading. And you guys, I will catch you on Tuesday and give you a better readout of what's going on. Have a good day.